Look at your phone. You use it to manage your life, move money around, and see the world in real time. But if you were to head down into the underground vaults of the world's major central banks in New York, London, or Beijing, you wouldn't find high-end servers protecting the wealth of nations. You would find shelf after shelf of gold bars quietly collecting dust. In a world of satellites and AI, why do global powers still cling to a heavy metal that pays no interest and that humanity started mining 5,000 years ago? It isn't about tradition or aesthetics. It is about a mathematical need for financial survival that governments rarely admit out loud, though the numbers from 2026 make it crystal clear. To understand this obsession, you have to grasp the fundamental difference between currency and money. Almost everything in your wallet or banking app is fiat currency. The word fiat comes from the Latin fiducia, meaning trust. This means the dollar, the euro, or the real have no value on their own. They are worth something only because a government promises they are. If that government overspends, goes to war, or prints money endlessly to pay off debt, that trust evaporates and the paper loses its buying power. Gold, on the other hand, is what economists call real money. It is nobody's promise, it doesn't rely on a politician to be valuable, and it cannot be created out of thin air by a central bank. It possesses intrinsic scarcity. There is a limited amount of gold on the planet, and the cost to extract it is high, making it the ultimate store of value throughout the centuries. The real game changer in recent years has been counterparty risk. Imagine you keep all your savings in your neighbor's bank. As long as you get along, your money is safe. But if you have a falling out, that neighbor could simply freeze your account and tell you you no longer have access to your own hard work. This is exactly what the world recently witnessed when the foreign currency reserves of major nations were frozen by political decisions. Regardless of the reason, the financial fact shocked the world. If you hold your reserves in another country's currency, you don't truly own that money. You only have a permission to use that can be revoked at any time. Countries like China, India, and Turkey realized that if a reserve currency can be used as a weapon, it's too dangerous to rely on it exclusively. Gold held on your own soil is the only asset that no one can confiscate through an international banking system. It is a nation's ultimate guarantee of sovereignty. Another pillar is protection against global inflation. Have you noticed that prices are rising almost everywhere? This happens because the supply of paper money has grown explosively. When governments print trillions to cover debt, the purchasing power of every bill decreases. Gold does the opposite. There's a famous market comparison. 100 years ago, an ounce of gold bought a high-quality suit. Today, that same ounce of gold still buys a high-quality suit. If you had saved the equivalent in paper money back then, today you wouldn't even be able to buy a tie for that same suit. Countries invest in gold to ensure that the nation's wealth isn't eroded by constant price hikes. It's insurance against government mismanagement and the cycles of crisis that periodically hit the global economy. Beyond safety and protection, there is a crucial technical factor in international banking regulations. Recently, global regulators reclassified gold as Tier 1 asset, the highest level of security. This means it is officially recognized as having the same level of stability as cash or the safest government bonds in the world. This change gave central banks the green light to increase their gold reserves without facing accounting penalties. Before, gold was seen by some as a volatile asset. Today, it is the bedrock that allows a central bank to tell the market that they have real backing to sustain their economy. When the financial system wobbles, the gold is the weight that keeps the ship from capsizing. You must also consider strategic diversification.
No sensible person puts all their eggs in one basket, and nations are no different. Holding reserves only in dollars or euros exposes a country to internal problems of those nations. By buying gold, a government creates a balance. Historically, when the dollar falls, gold tends to rise. Whether it's tension in the Middle East, conflict in Eastern Europe, or a trade dispute in Asia, the market runs to gold. This safe haven dynamic allows the metal to act as a buffer. It reduces the impact of external shocks, giving a country's economy the breathing room to weather global storms without its domestic currency collapsing entirely.
But why has this race intensified so much nowadays? The answer is the end of the era of easy money. For a long time, global interest rates were very low, making government bonds attractive for countries to hold as reserves. But with high inflation and the national debt of major powers hitting record levels, those bonds are no longer seen as foolproof. U.S. debt, for example, is growing at a speed that scares creditors. Strategic countries are looking at this scenario and searching for an exit. Gold is the bet for those who want to be ready for a reset or a change in the global rules of the game. If the financial system needs a new foundation of trust, those with gold bars at home will have much more bargaining power. Logical reasoning leads us to conclude that investing in gold is not a return to the past, but protection for an uncertain future. We live in a world where trust between major powers is at its lowest point in decades. Gold is the only universal financial language. A kilogram of gold is recognized and accepted anywhere on the globe, without the need for a complex contract or a digital middleman. It is the ultimate liquidity. In the event of a technological failure that brings down banking systems, physical gold still has value. In the event of hyperinflation that destroys a national currency, gold remains the medium of exchange people trust. You have to understand that countries don't buy gold to turn a profit next week like a tech stock bet. Gold is an investment to preserve wealth. It pays no dividends and generates no quarterly profits, but it guarantees that the value accumulated by a nation's hard work remains intact 50 or 100 years from now. It is a long-term vision that ignores the daily news cycle and focuses on the survival of assets. When you see central banks buying tons of gold, they are sending a message. They are buying time and security in a world where paper promises are becoming increasingly fragile and government debts are becoming increasingly unpayable. The conclusion is obvious to anyone looking at the facts. Gold is the only form of money that has never failed in 5,000 years of history. Every paper currency ever created, without exception, has eventually lost almost all its value or disappeared entirely. Gold remains. Nations continue to invest in it because when the dust of crises settles and the printing presses stop running, what remains is the real value of the material. Financial balance requires you to understand what is physical wealth and what is just a digital entry in someone else's system. Gold is not just a metal, it is the life insurance of nations. And if the world's leading financial experts are running to it, maybe it's time you understand what they are trying to protect.